Hi, Tasty Nation. This is the Canadian Options Trader. And today I'm going to talk a little bit about options on futures, also known as futures options. I like to use futures options because they're a capital efficient way to boost my theta. And I talked about my theta versus delta in my previous video, so make sure you check that out if you haven't seen it yet. So here's a spreadsheet that I made up that I like to refer to whenever I'm trading futures options. And this little bit down at the bottom here is just a little smaller version that you can print out. And I like to keep a little copy of that in my pocket at all times for whenever I'm trading futures options on the go. This is pretty much the same that I presented on Tasty Trade with Liz and Jenny, but the one change I made to this since then was I added in here the NASDAQ. So that's a new thing. Why do I even need a reference sheet to refer to when I'm trading futures options? Well, the reason is futures options can be quite complicated because they all have different multipliers, different tick sizes, different dollars per point. And I've got all that in the spreadsheet. And you can either memorize these things or just write it down or print it out and have it to refer to whenever you need it. The example I gave on the Liz and Jenny show for a trade was /ES, which is the S&P 500 futures. I'll do a different one today as a sample trade. The nice thing about this spreadsheet is you can put in what you want for your desired max loss, which is your risk. I like to size all my futures trades so that I have roughly equal size or equal risk for all the trades. So I've chosen for my own risk tolerance, $2,500 as my max loss. You can change this to say 2,000, and it recalculates all the numbers, all your desired widths and credits for all the products. Even if you wanted to adjust this down to say $1,000 max loss and change this to maybe $200 on your desired credit, that would still give you a probability profit of 80%, but you'd be risking a lot less. So there's always a trade-off between your risk to reward, your probability of profit, and your max loss. But if I go back to 2,500 for now, this is my version. And if I choose a desired credit of $500, that gives me a probability of profit of 80%. So where does that 80% come from? You just take the credit. So if I go equals $500 credit divided by my max loss, which is 2,500, enter, that's 20%. So that 20% is my probability of losing on the trade. So 1 minus 20% is 80% is my probability of winning.
So you're telling me there's a chance? Yeah!
If I was to change that to say 2,000 for my max loss, it will change my probability of profit to 75%. So 500 divided by 2,000 is 25%, and 1 minus that is 75%. So that's what the probability of profit comes from. We use that on every trade we trade with options. With spreads, it's really easy because you just take your credit divided by the max loss. I'll just go quickly through what all these products are in the spreadsheet. So this is NASDAQ, S&P 500, corn, soybeans, wheat, gold, oil, bonds, that's the 30-year treasuries, notes, that's the 10-year treasuries, silver, natural gas, British pound, Aussie dollar, Canadian dollar, euro, and Japanese yen. So these are all the major futures products. These are all the ones that have options or that are liquid enough to trade their options. Way over here on the right-hand side for our Canadian traders, I've got all the IB symbols. They're all pretty much the same for the first few. It's really just the currencies that are a little bit different. The British pound, Aussie dollar, Canadian dollar, euro, and Japanese yen all have different symbols. That's one of the downsides of using IB. They always got to do something a little bit different. But IB is the best we have in Canada right now, so we're going to keep using it till Tastyworks comes. Okay, so if we use, for example, /ZS, soybeans has a relatively high volatility right now. It has a high IB rank, so that's a great candidate for selling premium. According to my little chart here, I want to aim for a spread width of 50 points wide and a desired credit of 10 points, which is $500. Let's pop over into my trading platform. Here's all my futures products here. The infinity symbol just means the continuous contract or the front month contract, which is right now May 2021. ZS is soybeans. If I click on that, it'll do a chart here. We had a luck limit up in soybeans the other day, which was kind of unusual. And it's another reason why we have high IV rank. The funny thing about soybeans in Interactive Brokers is it's got two different expirations. So if I'm sticking to the Tasty Trade mechanics, I'm looking at the 49 days to expiration, and there's two different expirations here. They're both May options, so May/July and May/Nov. So if you hover your cursor over top, you'll see that the underlying contract for these May options is July 2021, and the underlying futures contract for these May options is November 2021. So I'm just going to pick the closer dated one, which is likely to be the most liquid one. This one here, 49 days to expiration. And I like to start by selling roughly a 20 delta. Here's the 20-ish delta on the put side. I've got my strategy builder turned on. I'll go and sell that one, the 1320 strike. Remember, we said we're going to go 50 points wide. So I'm going to go to the 1270 to buy the strike. So that's my short put spread. And I'm going to do the same thing on the call side. So the 20-ish delta here is the 1510 strike. And then I'm going to go 50 points wide on that one, which is the 1560. And it's routing the order here. The mid price is roughly around 11 points. I put that in, you can see the margin impact here. The buying power I'm going to use to do this trade is $1,200. And what is 11 points? Remember, I want to collect roughly around $500 credit. It's actually $550 in this case. So according to my chart, the multiplier is 50. So my probability of profit on this trade is roughly 69%. So that's right up my alley. Around the 70 to 80% range is usually my target. There's always a trade-off between risk and reward and probability of profit and reward. So my max loss, remember, is just the spread width minus the credit. So roughly 1900. So using this soybeans trade is a great way to boost my theta while using just a little bit of buying power. So, $1,200 in buying power is really great for collecting a $550 credit. Commissions are pretty high on futures options. That is one downside. But the other reason why I like to trade futures options, like I mentioned on the Liz and Jenny show, is it's a really great way to boost my theta in a capital efficient way.
I use a lot of credit spreads in the spoos because, like Stefan was saying, it's very capital efficient.
It is. Lisa, I love it. I love everything that you just talked about there.
Unfortunately, it's not showing any theta right here, I guess because it's the weekend and the markets are closed, but generally there would be a positive number there for theta. I'd be aiming for like $5 to $10 in theta on any individual trade. So I'll go ahead and transmit that. And when I get filled, it'll show in the position column here. So remember, in one of my tutorial videos, I showed how to add that position column as well as the delta column to my options chain. So check out my tutorial video on interactive brokers if you haven't seen that. Okay, so that's my sample trade in soybeans. Let's go back to the spreadsheet for a minute. The Japanese yen is a really tricky one because it has all these friggin' zeros in there. Maybe I'll just do a really quick example of that one as well. So if I click on JPY here, that's the Japanese yen. And I always like to unclick the weeklies and quarterlies here because I don't care about those. I just stick with the monthly expirations. Japanese yen doesn't have a super high volatility right now. So rather than going to 35 days, I might go instead to the 63 days. I actually already have a position on here in Japanese yen. And this one happens to be, I'm short the 89 strike here in the puts and long the 87. So that's 0.0002 wide on my put spread. And then the same thing on the call spread. I'm short the 935 and long the 955. So that's the same spread width on the call side. And if we look back at my spreadsheet, you can see that the desired credit that I was going for there was 4 zeros and a 4, which works out to $500. The nice thing about defining your risk on futures is you don't have to worry about anything larger than this loss. And then hopefully your winners will outweigh your losers if you have enough winners. The other reason why I like to define my risk on futures is because of buying power expansion. Anyone who's familiar with futures and familiar with span margining will know how span margining works, that when volatility spikes, the buying power can go up. And that's just how span margining works. So if you define your risk, you're not going to ever have any buying power expansion. I shouldn't ever have to put up more than $2,000 on one of these spreads because I can never lose more than this max loss number here minus the credit that I received. Now, if you went naked on some of these futures trades, you are subject to buying power expansion. So anyone who has traded through March 2020 will know what I'm talking about here. Some of these futures contracts, the buying power went crazy because the volatility went crazy. It wasn't just one of these futures contracts that had buying power expansion. It was a whole bunch of them all at once. I happened to be in a few of these. And, oil went crazy, bonds went crazy, gold and silver went crazy. Some of the currencies I remember went crazy too. So this is just a safer way to trade. I don't always trade defined risk on futures, but I'm just a little bit more cautious after what happened last March of 2020. It's like a once in a decade event, right? But it could wipe you out if you have on too many positions, if you're trading too big. So remember the tasty trade model, always trade small, trade often. The nice thing about futures is a lot of them are uncorrelated, but some of them are highly correlated. So for example, even though I've added NASDAQ to this chart here, I wouldn't necessarily ever want to trade a big position in NASDAQ and S&P 500 at the same time, because I know they're highly correlated. The same goes for corn, soybeans, and wheat. If one of them moves against me, they might all move against me at the same time. So I might just pick one out of the three. Same thing for maybe gold and silver. Maybe I would just pick one out of the two and not both. And then some of the currencies, I mean, it's well known that the Aussie dollar and Canadian dollar are fairly highly correlated. So I probably wouldn't want to do an Aussie dollar and a Canadian dollar position at the same time. But one thing that Tasty Trade has taught us is that the Japanese yen tends to have a fairly low correlation to the other currencies. So that's one that I like to keep on. Okay, thanks everyone for watching. Good luck trading futures. Let me know in the comments if you have any questions about trading futures and futures options. And thanks for watching.